You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know the drill. Every Friday, 1 p.m. Central, 2 p.m. Eastern, via Mixlr after the fact on your platform of choice. We don't judge how you get it, as long as you listen, send in those questions, those comments. We do. Indeed, we do like to hear from you guys. And you know what? It seems like we had one narrative ready to go coming into the show. And then, as is often the case, the volatility worm has turned. So maybe some more exciting stuff to sink our teeth into today. And joining me to help me do just that, first off, from the volatility mecca known as Maine, we are joined once again by the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the show, sir.
It is a pleasure to be here. And maybe we, as usual with the show, it starts with the narrative, and then by the time showtime comes, the narrative has changed. Thus, the market.
There's a reason why we don't prep for this show much more than like an hour or two ahead of time. And even then, as you could tell, even then, an hour ago, it was a completely different story than it is now. So, yes, that is why we've learned hard, bitter tears over the years. You can't prep for vol views more than an hour ahead of time. All right. And also joining us to crack this volatility mystery, good old Mr. David Lincoln, our old friend. He of short vol show infamy. Dave, welcome back to the program to you as well, sir.
Thank you very much. I was very excited to be invited back on the program.
Well, it wasn't my call. Andrew kept bugging us. I was like, you know that David guy, I think we're done with him. And Andrew's like, no, get him back on. He's good. And so you can blame Andrew. It's all his fault, sir.
Well, I'm just flipping through screens trying to keep up with the scenario that's unfolding right now.
Yeah, let's get into it then with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
everybody. Welcome to the Volatility Review. This is indeed the portion of the program where we break down the surprisingly difficult to pin down world of volatility. You know, there's been a narrative pretty much all week. In fact, we were just hitting on it again yesterday on the option block and again subsequently with our buddy Mr. Rhodes, a.k.a. someday Dr. Vix, in the crude market, and just how strange the market's response has been, both in crude itself, in which it kind of spiked up, then came right back down. We didn't really see the enormous volatility explosion you might expect. We saw a vol increase, but not perhaps a dramatic result you would expect. And certainly in the broad equity space, a very similar scenario unfolding where we didn't really see perhaps the massive sell-off and massive volatility explosion that you would expect. Of course, the Fed later that week helped to mitigate things, and we actually saw some rallies. And then coming into today, it was the same beast. In fact, it was kind of a bit of a weird scenario given everything that had unfolded over the course of the past week. You know, these historic attacks in Saudi Arabia that took out pretty much the most oil off the map that we've seen pretty much ever, somewhere around 5.7 million barrels a day coming offline. That's more than just about any other event. You know, the oil embargo, the Iranian Revolution, all that stuff, more than all of it. The Iran-Iraq war, or the invasion of Kuwait, the Gulf War, all those events took fewer barrels per day off the market than this one attack did, and yet the market shrugging it off. And then coming into today, we had a weird scenario. Right before showtime, we had VIX cash was almost exactly, it was exactly unched. We were at about a 1390 in last week's show. It was at exactly 1390 coming into today's show as well. Spikes was down a wee bit, down about a quarter, and the markets were kind of slightly up. And then right about coming into showtime, we saw the worm turning all of a sudden here with the Dow and the S&P off now about 1/3%, so giving up their gains and then turning blood red here on the day, and the NASDAQ really getting hit down off 0.75% or so. Gold and oil still up. WTI still only at a 58. So not exactly perhaps the catastrophic moves you'd expect, but still interesting stuff. And of course, vol starting to spring to life. Like I said, it was unched, exactly unched right before showtime, and now it has now just gotten a new life. VIX cash up nearly 2 handles now, up to about 1590. So it is actually up about 2 points from where it was almost at the start of the show, and almost exactly up about 2 points from last week as well. And of course, spikes feeling the love as well, perhaps not quite as much. It's up to about a 1540, so that puts it up about almost 1.5 handles from this time last show. And of course, our old friend VVIX was kind of relaxing. It was at about a 96.5, so that means it was down about 3 points from last week. And of course, this recent vol pop means VVIX is moving again. It's up to north of triple digits, up to 102 right now. So back in that kind of lofty triple digit range where you got to pay attention to it. David, you're our guest, so I'll give you perhaps today the unenviable task of going first. First off, let's table this current discussion for a second. Let's just look back over the course of the week. And what are your thoughts on how the market and the volatility space reacted to what were these historic attacks over there in Saudi Arabia, and kind of shrugged it off until apparently a few minutes ago when they all of a sudden decided maybe we need a little bit more vol back in there? What are your thoughts on how all this is playing out here, sir?
Well, I always look to the term structure when I'm thinking about the VIX, and the term structure has come into a very, what I would call, normalized state in the last couple of weeks. We had a really wide width between spot and the now front month OCC future right after expiration, of course, being this Wednesday morning. Really wide width. And a healthy amount, I would call it, of contango developed pretty much after that Wednesday. We got up to about 7% contango. So that structure is a really resilient structure, and it means that, to me, that the volatility has kind of shrugged off those attacks, like you said. And even now with that pop up, we see the term structure has kind of moved up in tandem. It's flattened a little bit between OCC and O, but everything else has just moved up, and it's maintained its solid in contango structure, which means that I think this is kind of shrugging stuff off.
Even with today's bit of a pop, bit of the worm turning, you're still thinking the market's not really feeling much of the impact from these attacks in Saudi Arabia.
Yeah, I mean, we're still at 6% contango right now between October and November, and the rest of the structures kind of stayed intact. I mean, who knows what the market's going to do, but we are still near the all-time highs once again, and the VIX specifically really just seems to be shrugging everything off lately. Even like tweets and stuff, it seems to be shrugging off.
Mr. Rock Lobster, I know you've expressed this sentiment throughout the week here, one that I pretty much share, that, the markets seem to be reacting in a somewhat odd fashion to news that otherwise would be considered pretty dire. 5% roughly of global crude production just off the map in a blip. And the market's like, no big deal. It's another day that ends in Y. And then, of course, all of a sudden today we have maybe a little bit of the worm turning. So what the heck, I guess, is my question for you, Mr. Rock Lobster. What the heck?
Well, part of this, and I agree with Dave, it's the term we have it's just a normal term structure now. I mean, remember when we did the option block yesterday, there was a really heavy juice, and the future price was pretty high relative to cash. My guess is everybody's like waiting for the next, the next, whatever the next argument over trade is, or they just weren't letting that number come down to what I would call a fair level. I thought it was overpriced for a couple of days. And now, like they said, now it's normal with VIX up $1.50. And I think that was the expectation, that the cash would rise. And, but my next thing is that somehow I think all the tweeting by, Trump dissipates a lot of vol, because all this kind of crazy stuff gets out there and people take it and somehow it's almost like, if you have one news event and it only happens once a month, it just moves the market, right? It's just bang, it's huge. But if you have these constant events, or this constant stuff coming through the Twitter sphere, it's almost always volatility is now coming out in little bursts all the time instead of one big burst every once in a while. And the vol market is pretty good at reacting to what it sees. So I think VIX stays at a little bit more elevated level overall, somewhere around 13 to 14% instead of getting down to 10% like it did in 2017. That vol risk premium they just don't let it come down to the 12s or 11s anymore. So that's where the first level is. And then, you have a fairly healthy future premium now. And everybody just waits till the next event, and then all looks sort of normal as far as the market goes. And at least for this year, I think that's how it's playing out. And since we don't really have a big narrative change yet, equities just don't sell off that much. They're down, so the S&P 500 will drop from 3,000 to 2,900. I know that's a drop, but it's only 3 or 4%. It's not huge in 2 or 3 days. And VIX hasn't been over really 25 and stayed there, or over 24. Zone 4, the zone of destruction, the danger zone, for for most of the year. So you have is a higher VIX that orbits, and I think that's kind of where we are. And I don't think it's going to stop happening. As far as vol trading, I had to totally adjust my vol trading because I used to score a home run on the downside, and I have since been smacked around, and instead just trying to take the base hits. I was closing VXX puts this week, and I closed some VIX and VXX puts last week. Just, every time we get around the 13, just take a good chunk of it off, at least to get the deltas flat on the downside, and then move along and then see what happens, next on the upside. Right now, I'm just trying to sell some upside option calls, and I'm barely getting enough in a call sell to even make it worth it, So it's an orbiting market. That's all I can say. So if it's an orbiting market for vol, that's the market you've got. And until something changes, I don't think that's going to change very much.
Now, usually it's the lingering announcements of the start of vol views that spooks the market. Today appears to be what's turned in the market here is China called off a visit to the Montana Farm Bureau. And that apparently is what's enough to turn everything to the dark side today. Apparently that's not signaling the thaw in the trade war that everyone was hoping for. So market already passed the Saudi deal. The market they're buying what the Saudis are selling. They're saying they could put 5% of U.S. global crude production back online by the end of the month. This is just a blip. They can fix it, no problem. And we're already back to fretting about the trade war here. So apparently that's what's spooking everybody. Speaking of trade war and all this fun stuff, some people sending us in this survey. This is from the Wall Street Journal Survey of Economists. You know what we think of economists here. They call it the dismal science for a reason. But that said, according to the journal, the average probability of the economy being in a recession within the next 12 months has ticked up markedly since the start of the year. The start of the year was around 15 to 17%. Now it looks like it's closing in on pretty much double that, about 35%. So again, I think we can find the answers we're looking for here more in the term structure and skew of the options. But c'est la vie. That aside, Mr. Rock Lobster, Mr. Short Vol, are you guys buying here what the economists are selling? You think our probability of recession has doubled just in the past few months?
I don't know. I can let Dave go first, but it's all, if they clean up the trade thing, I think no. But if the longer it lingers, it's a year and a half now, it makes people uncertain. Uncertain people don't invest money. And, it's not like the Europeans. They already got negative interest rates, so they're not. What else are they going to do? So I think it's easier for us now to fall into a recession just based on uncertainty. I mean, 90% of the market's confidence anyway. So if people aren't seeing things getting done, they start pulling back the dollars.
Yeah, it really seems to be the narrative that the at least the politicians are putting forward about this recession talk here. And we'll just have to wait and see. Of course, the stock market is not everything with the economy, but it seems like we're poised to take out the highs again here. And, that could continue. We could ride that wall of worry for a while longer. So I think we'll just have to wait and see.
We will indeed. The economists not waiting, though. They're saying we're up to 35% probability of recession in the next 12 months. We're touching on the futures. Before we get off of that really quickly, because you're right, the futures are just all sorts of crazy right now. We talked last week on the show. It was kind of a much-hailed return of our old friend, the juicy contango, as we termed it. It hasn't been around much this year. We kind of missed him, and now he's back. Been mostly flat to kind of weird, I think is a technical term for the term structure for most of the year this year out there in VIX futures. But our buddy, old friend of the show, I think it was Matt or Mike, one of the two. I think it was Matt, who's the one who tweets all the time. I think it was Matt. Put out some interesting notes on contango and its impact, and kind of a bit of a counterintuitive point, which I thought was interesting and maybe worth mentioning here on the show. He was tweeting out some charts about VIX futures contango and making, again, maybe a bit of a counterintuitive point that the stronger the contango is, the less often that front future falls in relation to the spot. What he terms it, the VIX gravity for spot VIX, which I like that term, spot VIX gravity. Because obviously the conventional wisdom is that strong contango is good for a lot of things. It leads to erosion in VXX and also maybe some hardy erosion out there in that spot VIX as well. And he says, nope, actually, when the curve is steep, it's the opposite. Because a steep curve, that usually equates to a long time to expiration. And then, again, there's my favorite term there, the gravity has the greatest effect in the other time frame when that future, of course, getting a little closer to expiration. He tweeted out some cool visuals, too. We'll try to put them here in the show notes so you can see. I'll give him a follow. He's a good follow on Twitter. There's @DynamicVol. Check out. I'm not sure if these are his charts or maybe he pulled them out from RMC. I know RMC just happened recently, so maybe this is someone's presentation there as well. I'm not sure. But either way, kind of interesting. When there's a lot of time to expiration, front month VIX falls less often than spot VIX, and it's kind of vice versa. When you mild contango, front month falls about 9% more often than the spot. And again, mild contango typically common just before expiration. So Mr. Rocklops, I thought this was kind of interesting. A fun little nugget, especially for a lot of our audience, that could be counterintuitive to them. Is this a topic you've touched on in your volatility newsletter, sir?
Yes, I'm going to tell the Thompson boys they stole my whole gravity thing. That's all my VIX made easy concept.
Is that your term, VIX gravity?
I'm going to go smack them in the head when I see them.
Oh, they totally ripped you off. I think lawyers need to get involved now. Just go straight to 11. So, but I don't disagree with the Thompson boys. They're good vol traders.
And part of, like, because I do all my VIX and VXX as a pair, so I like to pair the long, basically the accelerated market short for vol against like a SPY put butterfly or SPY puts, or depending on what flavor looks the tastiest that day. And, you know, the heavy contango is, there's a lot of pressure always, like that future's up there and you know it has to come down, but that usually presages something else, so that changes the way I pair it, maybe a little more aggressively. I was more aggressive this time. I just bought a VXX Strangle. But the one thing is that, you know, vol has a time and a pattern. Actually, we measured it and we went back and just did a regression, and, you know, okay, we have a theoretical value for what the curve should be at any point in the cycle. And is it totally scientific? No. I mean, it's an observation from all the data, so I guess it's scientific enough. And you know, it's not a surprise that there's huge contango right at the beginning of the cycle. So I think if you want to trade the vol products well, you really have to learn how VIX acts in the 30-day cycle. Like, because on Wednesday it was expiration, and then everything becomes the October future as far as most of the vol products that people follow. And they all have a flavor with 30 days to go, because time has value. So you're trying to figure out, you know, or, you know, what I've observed is how much value that is. My observation is like around $2 a contango with 30 days to go to expiration. When VIX is around 12, zone 1, the beginning, or just at the top of zone 1, that's about a normal amount of premium. Like when, you know, just based on observation, right? Fitting a line. And then when it deviates from there as time goes on, that's when vol trades become less or more interesting. And so it basically, I think, agrees with what the Thompson said, because they stole my gravity thing anyway. And they took all my thunder, and it doesn't matter anyway.
We just notified them of that fact and informed them that it's time to get a lawyer. So so there you go.
We're going to, like, VIX made easy and VXX made easy. There's all gravity all over the place, but it doesn't matter now because, you know, whatever. But maybe the Thompsons will make volatility famous, and then more people will come and check out OptionPit.
We were acting on your behalf. You've already contacted some volatility-oriented lawyers on your behalf, sir. So we're getting the ball rolling for you. We love nothing better than a nice volatility-tinged legal fight. That just gets the juices flowing. Dave, obviously you live in that short vol side of the curve here. What do you think about this VIX gravity and the somewhat counterintuitive notion that we kind of just outlined here, that maybe steep contango isn't exactly what you want? You want more of that mild contango right before expiration.
Well, first of all, props to the Thompson brothers, and I have nothing bad to say about them because I want them to continue to accept my invitations to come on the show for interviews. So.
But you know, I already mentioned to that lawyer you're going to be expert witness, so you're on Andrew's side already. It's too late.
Put him in the middle. In the middle.
But yeah, no, I think Andrew makes an excellent point. Is we always have to remember where we are in the expiration cycle. For example, right now we're only like 3 days into like around a 30-day cycle. And that's going to be important to any calculation we make. But second of all, the contango, which is kind of just the difference between the two front month futures, is important. But also the thing that's been impressive over the last few weeks is actually just the distance between both of those futures and spot. And they kind of stayed way above spot right before the interest rate announcement, and that kind of made sense. But after the interest rate announcement now, you would think that distance would narrow, but it really hasn't, which makes me think the futures guys see more action ahead.
Speaking of futures, before we get off futures, very quickly, this is completely unrelated to volatility, but it is on the futures concept, because Mr. Rock Lobster, how long have I been beating the freaking drum for a Bitcoin option on the CME future, on the CBOE future? How long have I been beating that drum, sir?
I think at least one day after they listed the future, yes. Or actually might have been a year before they listed the future.
A long time. Coming up on 2 years in December, I've been beating that drum. Well, guess what? They're finally here. Well, in Q1, they're going to be here. CME announced this morning, because they couldn't announce it yesterday on my show that I actually do with them, that I've been bugging them for, 2 years now to launch these freaking things. But hey, they announced today. They said, according to them, based on increasing client demand and robust growth in our Bitcoin futures market. No. It's because I've been pestering them, and our audience has been pestering them for nearly 2 years. I've had Tim McCord on a legion of times. I had Julie on the panel with me. I've bugged everybody I possibly can at CME for the better part of 2 years. Even the Esther Purse from the SEC, I even bugged her recently. And when are we going to get the freaking options on the futures? Well, we finally got them. So what I'm saying out there, I guess short summation to my topic here is you're welcome is what I'm trying to say here. I got these options on futures for you. So there you go. David, now you can trade options or soon can trade options on Bitcoin futures. And Andrew, all your crazy in your pit chat can now trade options on Bitcoin futures. And what I say to you is you're welcome, sir.
I think it's going to be, I think the options will make the futures trade more, and it'll probably become, I don't know, it's not going to be as big a fix. Maybe, I don't know. But the options, all that volume begets volume. And I think it will become the Wild West. And now I actually will start taking a look at Bitcoin. You know, I missed it when my pitties were mining it 7 years ago. And so now maybe you can make a couple bucks trading the options.
Ah, the pitties. Yes, we love the pitties. But you're right. That's been my point to them from day one. Options will get more volume in the futures and vice versa. So the fact that it took this long is kind of ridiculous. But we're here now. We're there. And it's not even here yet. It's not till Q1. So we'll be at that point pretty much exactly 2 years from the listing of the futures. So everyone who had Q1 of 2018 in our poll way back in the day when we first did it, yeah, you were off by about, I was the laggard. I said Q2. We were all off by a year plus there. But it seems like it's finally coming. And I'm going to hopefully get Tim back from CME on soon, sometime next week, to give him a hard time about this and also say, hey, why wasn't I named in the press release? You're welcome. All right, let's keep on rolling. Let's keep on rolling here. Let's get on into some products that are trading like Spikes. Spikes had, you remember we talked last week, just coming into Showtime, we had John on from MIAX and the MIAX Hot Seat, and he was pretty much breaking down a trade that was just going up right about Showtime. A huge roll it was out from ACH into Nove, and that position now still, surprise, surprise, still dominating the OI out there with about 12,000 of the Nove 27s versus 6,000 of the Nove 18. So the old 1x2 still dominating the tape. Then we got the still a little bit of size left in the 1x2. They didn't close all of it in October, which is kind of interesting. It's the ACH 3020 1x2, 1,750 by 3,500 times. So usually you see the 1x2, you roll fully from 1 month to the next. Of course, they had some SEP on too. They took that off. And so interesting stuff out here. Dave, I know you're in the MIAX hot seat today, actually. So technically, I'm not sure if you know this, but you can only talk about Spikes. But is this a product, I know you're probably waiting for the future like a lot of people, which is coming soon, but this is a product that has come on your radar in your volatility analysis of late, especially as it's starting to do a little bit of paper here, the Spikes options?
Yeah, I'm not an expert in Spikes. I have actually added it to my watch list now so that I can start tracking it, but it's kind of been off my radar. But definitely having it on the show here has helped publicize it, and some of my people have been watching it, so I'm going to get more into it, I promise.
Didn't I tell you that's MIAX hot seat? You can only talk Spikes, sir. You're a resident Spikes expert now, so all Spikes questions have to flow through you.
Okay.
All right, let's move on then. VIX options. It's been a kind of a weird week. I think you can call it for VIX. The worm is turning today. I think we'll get to all that. Usually we start with today's volume and work back, but think about it today. I think that's kind of backwards. Let's start from the beginning of the week and work forward. That's more of where the narrative, kind of how it unfolds in the marketplace. First off, let's break down what's going on out there. Total from a top 10 positions out there, top 10 OI. Number 10, actually a lot of SEP just came off the board. So OI a lot lower than it was this time last week. Number 10 is all it takes is 133,000 to break into the top 10 in VIXland, which you listening to the show for a while. That's not much. $133 for the ACH 18s. Number 9, the ACH 40s, 137,000. Number 8, ACH 24s, 143,000. Number 7, the ACH 20s, 145,000. Number 6, the ACH 30s. So pretty optimistic upside in ACH, dominating the bottom half of the top 10 there. $156 there for the ACH 30s. Number 5, ACH 26s, 171,000. Number 4, our first and indeed only put in the top 10, the ACH 15 puts, 173,000. Number 3 here, the ACH 28s. Getting a bit of a theme here, listeners. 175,000. Number 2, the ACH 25s, $184. Number 1, with a very mild, modest bullet, 209,000 of the D's 21s. 209,000 usually is maybe barely enough to break into the top 10. Usually not enough to get you to number 1, but right now, with a lot of it off the board, that's pretty much all it takes. About 6.4, almost 6.5 million out there on the OI, about 5 million on the calls, and close to 1.5 million there on the puts. Let's go back and see how the week unfolded, because it was a weird week just by any stretch of the imagination. Of course, we had the news breaking over the weekend, these historic attacks in Saudi Arabia. At the time, we didn't know where they were coming from. It was suspected to be Iran, but we didn't know. 5% plus of the global crude production offline, madness, chaos. And what happened on Monday? Not a heck of a lot from a VIX perspective. It was actually one of the lightest, I think it actually might have been the lightest day of the week. It was, because only 338,000 contracts really on the tape on Monday. The largest print was, it's hard to even know what the hell this thing is. Maybe there's some legs missing here. It was a Nove 1923-30, not even a fly of a traditional. It's kind of a funky ratio. 3,000 by 6,000 by 9,700 versus 14,500 of the Dees 19 calls. None of it makes any sense. So Monday, kind of a weird day in general. Then we go on into Tuesday. Tuesday was where the volume started really popping off here. Tuesday, they hit a million, almost exactly 1.01 or so million contracts going up in VIX land. Some big prints. Looks like flies have kind of been the order of the day here. And put flies, really, the order of the day this week. In particular, size print on Tuesday, it was the Nove 13, 16, 18 put fly going up 40,000 by 80,000 by 40,000 times. So a nice $1.60 just in pretty much almost half of Monday's volume, just in that one size put fly print. They did it for 17 cents and then a buck, and then $1.17, excuse me, and then $2.34. So the prices lining up kind of nicely. They're also seeing, it wasn't all put flies, but a lot of put flies. And then, of course, there was some upside, of course, as you would expect as well. Sweeping mid-market, as they always do. Upside 43,000 times of the OCK 26s for 55 cents. Also looks like maybe a weird bearish risk reversal, which at first, my first blush, I looked at it and I thought, okay, maybe this is closing. Someone had a nice bullish risk reversal on and they were taking it off maybe for some profit. But that doesn't appear to be the case because the put leg is opening. So it was the OCK 2030 vertical going up 22,000 times for $1.24 on the 20s and 38 cents on the 30s versus 46 cents on the puts. And all of it does seem like it's leaning bearish. Seems like they were buying the puts, selling the call spread. So interesting. And again, it was opening not on the calls, but opening on the puts, which leads me to believe maybe someone just coming in and aggressively fading that pop there. Either that or they got some long VIX futures maybe, and they want to get a little bit of hedge action going on there, and they want to finance it with some upside. Mr. Rock Lobster, we don't talk a lot of collars / bearish risk reversals in VIX land. Is that a strategy you like, and is that what you think this guy is doing here? Is he collaring some futures, you think?
It's a hard one because I hate selling the VIX puts when you're in contango, because you think about it, the whole thing is sell the puts at the end. You don't sell them at the beginning. They never do a damn bit of good until like the last week. I don't think anybody ever knows that, though. I mean, they're going to stay that price forever. It could be the upside calls always make this type of trade interesting. It's hard to know without the tie to stock on that one. Okay, so I'm looking at this, how it goes up. Okay, they sell the call spreads and buy maybe like delta neutral with stock, it works. I think part of it could for sure work, right? Delta neutral with stock. If it blows up, you're long the futures. I totally get that part. But it's the problem with a trade like this with VIX is for these type of trades, if you put them up delta neutral, you need the underlying to go down a lot. I mean, it's hard for VIX to go much lower than 13 lately. So I'm having a hard time trying to figure out how this trade works out unless they're putting it on to trade it more actively, I would say. Maybe Dew has a better idea, but like if you buy the future and then you sell the call spreads, maybe you're looking for an upside compression to unwind the whole thing. I'm just trying to figure out exactly how to trade it when the downside really isn't going to go that far. That's my big question.
I had a feeling that put leg was going to stick out in your mind as something you didn't like. So yeah, that's why I get the big bucks for hosting here. I know what's gonna cause you umbrage out there. Dave, you're the short vol guy. It's in the name. Are you a fan of this approach of doing the puts with the kind of bearish vertical against some underlying? Is that a trade you like, or maybe by itself?
No, I'm the same with Andrew. I don't like to sell those puts because it can just roll right through them pretty easily. The point I like to make with people with all of these big size that happens on the VIX futures is when you see the VVIX make a move, you want to switch over to your time and sales and see what is trading that day, because that's going to color what that VVIX move means for you based on what's happening. Because it's not always, when you see the VVIX move up, you kind of assume in your head they're buying out of the money calls and VIX and they're afraid, of a spike. But a lot of times it's these weird 1x2s and stuff are all adding up to VVIX moving up, and that means something a lot different than just people buying out of the money calls. So I think it's instructive for viewers to actually dig in a little bit to this time and sales stuff when you see a VVIX move. Certainly.
That way lies madness, sir. As someone who spends a decent amount of time parsing time and sales and VIX, trying to put together all these freaking legs, it is madness. Even the Flowmaster and his great system Trade Alert, it has a hard time putting together the VIX legs and spreads because they are all over the place. They are all different sizes. They don't really line up. The times are all over the place. And there's so much size usually. It's like, for example, Wednesday. Good example. Wednesday was the big volume day of the week, about 1.2 million. It seems like, again, with that put fly was just had captured the imagination of somebody because it went up again. Not this time, not in Nove, but in Dece and Jan, and for the same strikes, 13, 16, 18. That was the put fly du jour. Doesn't matter the month. And they went up for a pretty decent size. Looks like 25,000 by 50,000 times for by 25 again, of course, for the Jan fly. Then another 5 by 10, so total of 30 by 60,000 in the Jan fly. Looks like about 25,000 by 50,000 of the Dece went up. But again, getting back to the weird portion of parsing legs and VIX, I nowhere could I find the 18 put leg, so maybe that just went up as a ratio put spread in Dece. Maybe someone got inspired by Jan. I don't think so. That would be weird, but weirder things have gone up. So size 13, 16, 18 put flies were kind of the trade du jour. Pick your month. Nove, Jan, Dece, doesn't matter. Going up for hundreds of thousands of contracts this week. There wasn't all that, though. There was some upside, obviously, as you would expect a week like this. OCK 17's getting swept for nearly $2 there, 40,000 times. And then Dece 21's also getting swept for, let's see, $1.85, so right off the offer. And the other ones were right off the offer as well, so also 40,000 times. Different time frame, though, just happened to line up size-wise. So it wasn't all funky put flies. It was just mostly funky put flies. Also, maybe some without missing a leg. And then yesterday, a decent day, a little bit shy of 500,000 contracts. It's like most of that coming in some rolls from OCK out to Jan. It was the OCK 2540 1x2, 18,500 by 37,000 times going out to Jan. Instead of going OCK to 40, they went to Jan 35. So going out to Jan 2535 1x2, 18,500 by 37,000 times. So taking an opportunity maybe to roll that bad boy from OCK out to Jan. Also in a Love Your Broker category, we get the OCK 15, 16 put spread going up for, looks like 60 cents, 20,000 times. We mock these in other products and in the odd block, Andrew, when we see these kind of super tight $1 put spreads going up. They have a little bit different resonance for VIX because it is a much lower price level product at the end of the day than an Apple, which is like, $200, something like that. But still, these $1 put spreads, I always kind of scratch my head. Are you ever utilizing $1 put spreads, Andrew?
We do 1x2s.
Yeah, the ratio I get, but 1-to-1, yeah.
Not a ton of them unless the payout looks really good. Just because the way VIX settles makes it a little more it's a little bit more of an interesting trade, especially even with the way the Thompsons just talked about how the future acts and how the future acts in the cash, with a week or two to go. These in the money, the risk reward on this stuff looks pretty good. They can be quite in the money. They don't cost very much, and your 15 cents makes you, 45 or 50 cents or something like that. So just VIX has you're right, the unique character of these little spreads could work. It is a way, I guess, to do something.
I guess that's damning it with faint praise. It is one way to accomplish the goal. It is by no means anyone's preferred way. It's like you got to cross a river. You can go over the bridge, or you could swim over the falls and die. That's one way to maybe do it, but you probably don't want to go that route. And today it's another weird day. Like I said, you got that. It was quiet on the VIX front, and then volatility popped back up to nearly a 16 handle in VIX cash and higher in spikes, and now it's back to about a 15 handle again, giving up nearly $1 of what it made today. So it's a weird day. Not a ton of paper today going out in VIX land, despite, let's get some updated numbers here really quickly, because it was looking pretty light earlier here in the day. We were I just had today's numbers here, and I put them, there we go. It was at about less than 250,000 contracts, 221,000. Let's see if that has increased. Yeah, it's up a little bit, about 50-odd thousand more, 273, but still a very light day. The biggest trades out there. Looks like paper may be fading some of the upside here. To sell in the ACH 22s expiring on the 23rd, when the weeklies 14,222 times for 66 cents. So we're not that far off the bid. That's opening. So fading what little vol pop we saw today. Maybe that's what this is. And looks like Nove 26 is going up near the bid as well, 13,000 times. So it seems like what size paper there is out there today is kind of fading. Dave, you're out there watching vol day in, day out for your show. Any interesting trades or trends in VIX options land catching your eye this week?
Well, I was just looking as you were talking right now. There was somebody who dumped 2,500 of it looks like no 16 puts at $1 on the bid versus 1488 in the VIX. But as you know, I am a big UVXY guy, so that is what I'm always talking about. And we've just seen it's been characterized by a lack of liquidity, UVXY. It's been very tough to trade lately, and everything seems to be wider and wider right now. So be careful.
Yeah, that's right. You're Mr. UVXY. So I guess we'll get into those ETPs now. It is that time of the show here. We'll start off with VXX. That's the one I know a lot of you like to sling before we get into Dave's esoteric UVX. He's one of the last of the Mohegans out there in good old UVXY. I think a lot of people got turned off of it after the whole neutering of all those products, SVXY, UVXY. But it sounds like Dave still liking what he's seeing out there. VXX, let's see, coming into the tail portion of this weird volatility session here. It was at about a 23. That puts it off about 1 3/4 points. And now it's at about 22.75, so it's down exactly about 2 points from last show. Not a ton of paper lighting it up out there today, or even this week, really. Let's look at the top 10 out here really quickly. Number 10, ACH 28s, 27,000. Number 9, the SEP 8, SEP 18, SEP 28s. And then number 9 were the SEP 18 puts. Number 8, the Jan 14 puts, 29,000 of those. Number 7, the SEP 19 puts, about 30K, also about 30K for the ACH 20 half puts. Then number 5, the Jan 22 puts. Number 4, the ACH 32 calls, 36,000 calls there. Number 3, the SEP 20 puts, 40,000. Number 2, SEP 22 puts. And once again, number 1 with a bullet, a very sad bullet. The SEP 17 puts, 53,000. They've been the number 1 with a bullet for some time. We've said it before. The clock is literally ticking on those bad boys now. They've got a few minutes left. In fact, pretty much all those last 3 I just mentioned, the SEP 20 puts, 22 puts, and 17 puts, and then the 19 puts at number 7, all going off the board, all that bottom half, all that pretty much going off the board. SEP 28 calls, also not looking good. This is a lot of OI going the way of the dodo, unfortunately, for a lot of our audience out there who I know likes to play in those extremes. The big trades out here this week, looks like it was, go figure, a lot of put love out here. Tuesday was one of the bigger days. We saw SEP 22 puts going up 15,000 times. Paper sweeping those for a dime. It's like taking a bit of a flyer and It's close, but it seems like no cigar. That's a dime 15,000 times you're probably not going to see again here. Wednesday, we saw ACH 20 half puts. He's obviously got a little more time. They got a month to go. 20 and a half in ACH seems a heck of a lot more reasonable than 22 in SEP does today. They got 29, almost 30,000 of those. That was opening. On the bid, though, they sold those bad boys. So interesting. Looks like there was a spread there, but the other leg is getting back to finding the spreads and time and sales. The other leg of this is duly hidden. So maybe they meant going up against Tide against some underlying there. Either way, weird stuff. Mr. Rock Lobster, are you sharing my sadness here that so much of this, once again, so much of this OI here in VXX is going to go the way of the dodo in a few minutes, sir?
It has, everybody has high hopes for some of these puts, and then it just doesn't happen, which I think is a symptom, like I said, of what we have. Like I would say even last year, for a good chunk of it before we had two pretty big fall events last year. I think people have gotten spoiled on that really low number, low VIX cash number, which just eviscerates VIX future, and it crushes VXX, and it crushes Dew's UVXY. So you're not getting as much of that this year for whatever reason. And like I said, I think the constant layer of volatility that is daily pervading the market just keeps VIX from really, for people having that confidence they had a couple of years ago. And I think a lot of that will come off when the trade war ends. But until then, I don't see us in the I don't even remember what we called zone one, but the quiet zone of the
zone of the monk.
The zone of the monk.
Not sexy
really
at all.
Make those puts come to life. I think it's going to be a while. So
picture VIX with a nice bowl cut, and there you go. That's your zone of the monk right there. Dave, I know you like your UVXY. Do you play it all in VXX? I know that's a fun little contango play. I know you liked it in the past. Is this one that's still on your radar here?
Yeah, definitely, because it does have a little bit better liquidity than UVXY at most times. I don't have to sit there and try to massage these markets to get in these like $1.50, $2 wide. You've got a penny wide market in UVXY, and you've got $2 wide spreads. VXX is actually a lot more reasonable to play in. And I think I have a more maybe optimistic sense of point of view as far as I think if we can take out the all-time highs and we just kind of melt higher here, that we could actually see vol going lower moving forward here. We'll actually have to wait and see. But that same dynamic that Andrew's talking about, how like this constant volatility of these like little events is kind of dampening those big moves. I think that could translate into a lower VIX as we move out throughout the rest of the year. But we'll have to wait and see once again.
All right, you twisted my arm. We'll get a little UVXY action going here as well, just because you're on, Dave, just because I like you. Here, good old UVXY at about 24.60 right now, up about a point, 0.99 out there. So a nice little pop here for UVXY. I'm looking at the OI, seeing what's big, what's dominating the tape out there in UVXY land, and it looks like similar OI to what we're seeing out here in VXX, just a little bit longer term. It's all Jan here, Jan 20 puts with about not a ton. Again, the volume not what it used to be. 18,500 is the big position out here. Also, it's like some SEP 27 calls. Those seem like they're going to go the way of the dodo today as well. So it's not just VXX that is the boulevard of broken volatility dreams. But Dave, explain to us why you're still out there slinging UVXY. Is it just because it's one of the last of the Mohegans, one of the last games in town, or do you have an actual love for this product?
Well, it's just that, it was, as you say, nerfed after the Vomageddon, but it still is 1.5 times leverage, which gives you, I would like TVIX to have options on it because that's 2 times leverage still, but it's just, you get that extra little decay based on the rebalancing with a leverage product. And yeah, it's 1.5 times now, so it's not nearly as fun as it was when it was 2 times, but it still is a leverage product, and that still gets me a little excited from time to time.
There you go. I get you. It's one of the last ones out. And you're right. TVIX, for reasons that remain unfathomable, still not optionable. TVIX not my favorite either, but That kind of shows you the slim pickings you got left in the vol space post Volmageddon. You got UVXY, you got TVIX and SVXY. Both of the latter two have kind of been neutered, and TVIX has its own litany of problems that we've addressed many times here on the show. Mr. Rock Lobster, do you find yourselves dipping your toes at all into the UVXY/SVXY waters anymore, or are you just still too angry at the great neutering of 2018?
I think SVXY has become massively useless. So I don't even know what to do with it anymore. Does it even move anymore? I guess it does.
Yeah, not really.
And the people that manage the product should be taken out. And, I think shot is a mean thing to say, but, I do think that. I think that definitely it hurt investor confidence. So anything that hurts investor confidence is bad. As far as TVIX is just, I don't like it as a product because it is not like VXX, which has still remained predictably crappy. TVIX is unpredictably crappy. So it's a harder one for me to justify looking at, even though I do know that it gets people, maybe a day trade or something, but dang, the overnight and the net asset value issues and stuff like that, it makes it really hard, to be honest. So I keep my world in VXX, VIX, and SPX and SPY, and the other stuff is on my screen. It doesn't get any of my dollars.
Yeah, I'm surprised. We've talked so much here on the show about ridiculous lawsuits swirling around VIX and alleging manipulation and all these kind of absurd tinfoil hat things, and yet here we have products that had legitimate bad behavior here, where they adjust the terms, adjust the product right pretty much mid-session, no adjustments to the options, pretty much screw every option holder on these UVXY, SVXY products. And there's, as far as I've seen, not a single bit of litigation on this. So there you go, Dave. Maybe keep your ear to the ground there. Maybe they need some expert witnesses out there. As we keep on rolling into our final segment, it's time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball. But before we get on with the dangerous proceedings to come, Mr. Rock Lobster, think you're in a little bit of trouble. Mr. Thompson has responded to your plagiarism, theft of idea allegations, and he is not happy, sir. And he is sending, shall we say, some high-level legal representation your way in the form of Jackie Childs of Seinfeld infamy, who says it is preposterous and outrageous, sir. So how do you feel about that?
And I believe egregious. He also has.
Oh, yes. Egregious, as it's pronounced.
Egregious, sorry, egregious. I knew how to do. Nice grammar.
We can coin new words here. It's okay.
Egregious. Egregious. Anyway. What a maroon. I of course I will have to lawyer up with I don't know. I can't remember who fought Jackie Childs.
Who are you going to get to match Jackie Childs one-on-one? So you got to do some legal digging here now. I don't envy you.
Yes, so.
I don't envy you the mess that I have created for you as a result.
Yeah. I'll get Ally McBeal.
There you go. She can dance to the imaginary baby while the lawsuit goes on. See, this is what we do here on Vol Views, listeners. We get our guests in trouble. All right, let's keep on rolling. We don't have time for the mailbag, unfortunately, listeners. We'll get more of you on next week. But last week, it was an interesting one here. We were kind of prognosticating, at least I was, a bit of pretty much kind of what we had, at least until coming into the showtime. I said we probably would maybe see it erode a little bit, then something would happen to pop us towards the latter portion of the week, and we'd kind of end up pretty close to unched, if not actually slightly up. We were at about, I believe, a 1390 in VIX Cash towards the end of the show last week, and a little bit higher in the spikes. I was feeling about a 14.25, which translates, if you're following the Vol Fefe, into about a Vol Fefe of 6. Listen to the show last week if you don't know what the heck I'm talking about. The meatball, however, he was fading hard. He was going down to 13.14. And here we are coming into showtime, just ticked down back shy of the 15 handle again, down to about 1473. It puts me within a half a point, puts the meatball about 1.6 points away, so he's out. So that means I get to be the winner. Half a point, I'll take it. Not bad. Not my usual kind of 0.1 bullseye or so, but I'll take it. Not bad, especially given all of the madness we saw at the beginning of the week. Over the weekend, it seemed like we might see a 20 handle out here and all kind of craziness. And who knew? And yet the market apparently shrugged off all of this, which is exactly what I predicted, of course, here a week ago. So let's fast forward to a week hence. Let's add David here on the list so he gets to embarrass himself along with us here. So that means I win. So the question is, do I want to go first or do I want to pick someone else to go first? Because we are in that kind of topsy-turvy. See, if I go first, Mr. Rock Lobster, he can come in and cart me. I don't expect that from Dave. I expect better behavior from Dave. I'll tell you what, I will go first. I earned it. Why not? All right, let's go. Let's see. This time next week, you got this will they, won't they dance with the trade war still going. Apparently no one cares about Saudi Arabia anymore. That's already done. So I still think we could fade off. You know, I don't like doing this. I always give the meatball a hard time for doing this because he always punts and keeps his pick the same the next week. But I kind of like where I am right now. I like 14.25 again. We're going to come off a half of a point between now and next week. And that far and no farther. All right, there you go, David. Watch you some time to do some analysis. As our guest, I give you the pride of second place. What are you feeling this time next week, sir?
Well, thank you very much. And I just want to remind the viewers that I did win this a couple appearances ago. So
yes, you did. That's right.
I have a fighting chance.
That's right. You did. You do have a victory to your credit, which is more than the Rock Lobster can say, and he's been on the show for like 8 years.
And I am going to fade heavily and go with a 12.8.
Wow.
Big fade.
Pretty aggressive. Of course, I guess I shouldn't be surprised. The show is called the Short Ball Show, after all, right? If you were coming in here buying a 20 handle, I would say, what's going on? What's wrong with you? 12.08? Interesting. All right, Mr. Rock Lobster. That gives you some room to work with. I have a feeling you're going to come in and be like 14.12, but hey, whatever you got to do, sir.
I mean, I hope Dew is right with his 12.08 because that would be a big ring the cash register for everybody probably. I would love an early exit. However, I'm going to stick with my thesis and say 13.59 next week, Friday.
Interesting. What do the Crickets say? What's their vote?
The Crickets that's how much they liked my answer. It got crickets.
You got these rogue crickets running through his office there in Maine. Well, there you go, listeners. So we got me on the upside. Rear upside day for me, 14.25. I guess I'm playing the Russell Rhodes game today here. And then the Rock Lobster, kind of the Goldilocks in the middle, 13.59. And Dave, a.k.a. Mr. Shortval, coming in on the short side, 12.08. That would be an interesting little development if we did indeed see those levels. Unfortunately, listeners, that music means we come to the end of an epic journey through the world of volatility. We talk markets not really reacting to the Saudi thing, then all of a sudden reacting right when the show started, then kind of not really reacting again, giving it all up, giving it back up again. Like that's kind of the narrative of the week, pretty much. Then we talked about a bunch of other products. Even had Dave squeeze in his little beloved UVXY out there. So, Dave, as our guest, if folks are intrigued, maybe they want to hit you up, talking some short vol, maybe they want to check out your own content. Where should they go? What should they do, sir?
You can find me on YouTube at VIX Crush and newly on Twitch television under VIX Crush most mornings at 9 a.m.
Doing the old Twitch. Well done, sir. I've often toyed with that idea of adding our stuff to Twitch, and we just haven't. We still barely use YouTube graphics. We don't do a lot of video. And so our stuff goes out there on YouTube, but it's kind of automated. And people are out there consuming it, and I'm glad they're enjoying it, but we don't really do anything with it. We need to kind of tweak it and get it in a more YouTube-friendly format. But if you like it over there, the channel is VIX Crush, Dave?
Indeed.
So there you go. Check them out, VIX Crush. Give them a subscribe over there on the old YouTubes. And while you're at it, he's, Famous Dave? Spell it for our listeners. They want to follow you on Twitter, Dave.
FAMIS Dave on Twitter.
Just look for the sweet Benny Hill icon. You can't miss it. It's got to be one of my favorite Twitter icons. I loved me some Benny Hill back in the day. The much bemoaned, much missed Benny Hill. And Andrew, I'm going to miss you as well, because it sounds like you're not going to be on in a while because you got some legal woes to deal with. But before you leave to go hire a lawyer, what can folks find over there in the land of the pit, sir?
I know. Jackie Childs, he's trying to fight his way through the crickets as we speak.
He's coming at you, sir.
He is. I'm coming at you. Land of the Pit. I've got my how to use our kind of, we have our vol sheets, our Edge Hunter sheets. Gonna do a little webinar next week on how to use them and how to use them to try to find edge in the markets like SPX. And that's on next Thursday. Go to our website, just on the homepage, and sign up. And it's free, and I guarantee you for sure will learn something, and the price is right.
The price is indeed right. OptionPit.com is the place to go. Get over there now, listeners, because you got to start saving for his legal fees. On behalf of the Rock Lobster and Mr. Vic's Crush, we'll see you back next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.